Welcome to today's show. If you're watching or listening to this, I want to spend some time quickly and tell you why I'm super pumped to be interviewing Daniel Scrivner today. I actually first saw and heard about Daniel on LinkedIn. I was going through LinkedIn feed, which I usually do, and I saw it. And then he has a tagline on LinkedIn, which is the Design VC. And I'm like, wait, like a designer is also a VC. And I got super attracted to that. And then I went down the rabbit hole and I found that, oh my God, he's invested in 100 plus startups. He was an early investor in some companies that all of us know, like Notion, Bison Trails. So I was like, oh my God, this is insane. And then he's got his own fund, Ligature, through which he's also investing in these companies, advising these startups. And that's where I reached out to Daniel and we had, some conversations. And then moving forward, now Daniel is a head of design at Class Dojo. So that's where I thought, what an amazing conversation point would be how Daniel manages to do both at the same time. Because definitely it's very intensive, probably takes a lot of time and effort. So that's what we're going to be talking about today. Daniel, welcome to the show.
Thanks so much for having me on. I'm excited to be here. It's a very nice intro.
Thank you. By the way, congratulations on joining Class Dojo as their head of design.
Thank you so much. I'm 30 days in, almost more like 6 weeks in at this point, and it's been incredible. So yeah, happy to share a little bit about that as well too.
My mind is just trying to figure out as in itself, the head of design role is so much time and effort. You got to ramp up the team, you got to hire new folks. And on top of that, you are advising startup portfolio companies and then also investing in new ones. How on earth do you manage all of this?
It's a great question. I mean, I think maybe the most important context there is, this maybe a year and a half ago, I was interviewing Scott Belsky and I had a similar question for him. I was like, okay, you've been at Benchmark as a VC, you're an executive at Adobe, you're a prolific angel investor. You've also written books. He's constantly active on Twitter with fantastic stuff. And so my simple question to him was how do you find time? And he gave one of my favorite answers, which is that he likes the sense of feeling fully utilized, which honestly gave me words that I can now use because, for myself, design for me from day one was always this endless pursuit and passion. And just the way, my wife can attest to this, my family can attest to this, anyone that knows me can attest to this. I am always on. So for me, from the moment I wake up until basically the moment I go to sleep, I'm always thinking about and doing something related to either design or investing. And so I think because that's the way that I approach it, I don't work 9 to 5, I don't even think about that. It's effectively for me every single day I wake up and there's a handful of things obviously that I'm doing that are critical for the team at Class Dojo at the moment. There's a handful of things that I'm doing around the fund that's, a mix of companies that I'm in active discussions with, we're in active discussions with, reaching out to new companies that are really interesting, trying to make final decisions about deals, trying to make sure that we're helping portfolio companies. We have an increasingly large portfolio. But for me, I think the other piece too, and maybe this might be even more of a helpful answer, is one of the things I've been super intentional about is, two things. I think one at a meta level, I'm just a huge believer in I have one go. And so I'm going to try to, I want to try to live the best life possible. And I want to try to find the highest expression of kind of what I can hopefully uniquely bring to the world. And so I think that's a part of it. And then a second piece of it is I've tried to get increasingly intentional over time about making sure that I'm hyper-focused on what I'm doing. And I think for a lot of people, they may look and say, okay, you do design work, you also do investing work. How are these things, related? But in my mind, really, everything that I do is at the intersection of business. Investing is effectively analyzing businesses and believing that you should be an investor in businesses at the earliest stages. And, with the work that I do as head of design, I largely see it as my role yes, I need to have a fantastic team of talented designers. And yes, I need to create the conditions for them to do their best work. But more than anything, my goal is really harness the power of design to be able to deliver fantastic outcomes for the business and for the company.
What if there's a week where it's super hectic, at Class Dojo, right? For example, and it's taking up all your time. At the same time, there's a couple of hot deals that you're in, talking about investing in that. So, you still have 24 hours just like me or anybody else. So in that, what do you do? Do you prioritize or do you put something in the back burner? Or, you also got a family, I'm assuming kids as well. So what happens then? If all three are demanding your attention at the same time, family, Class Dojo, and then also the fun.
Yeah, to be honest, that feels like the core challenge of every single day. And I would say there are no silver bullets. I do not have any super insightful guru answers. I would say at any point in time, there's always some mix of things that I'm doing well at and things that, to be super frank, I'm like really focused on making sure that I create the time and space to be able to work on. But I would say that, for me, it's just I am hyper focused on the fact I do have a limited amount of time. So, I've gotten incredibly intentional. Going into the week, I spend a lot of time thinking through my priorities. I then share them with my team at Class Dojo as it relates to all the work that we're doing at Class Dojo. And I do the same thing going into every single day. I try to be really force myself to think about, there's two things I'm always toggling between. Number one, I always have a list just because it's how I operate of just all the things that I need to get done. Anything that's on my mind that's causing me anxiety or that I'm excited about and need to get done is on a list. I'm not going to like pull up that list and try to, hit off all those things. And so effectively what I do is I try to go back to that list at the start of each day and at the end of each day. I try to think about really intentionally, what do I want to do the next day and try to create a subset of those things. And then more than anything, to be super honest, I try to be incredibly disciplined about just stack ranking that list in the right order and then making sure that it's in front of me all day long. And I could talk more about this, but I think over time I've developed an increasingly, it's not really complex, but I would say an increasingly like rigorous system for which I like use to prioritize my time and attention.
But just briefly before this, before joining Class Dojo, there was this period where you didn't have to split time between the fund and working at a company. So why, not go all in and just focus on running the, Ligature fund rather than also taking on a full-time job?
It's a great question. I would say for me, it really came down to honestly, it really came down to getting, I think, just really comfortable with what's been the driver of my success today. So maybe I'll frame it this way. For anyone competing, and I'm going to, this is specifically focused on kind of venture investing. For anyone that's done venture investing, I would say the single best quote that I still use all the time is, venture is an access class. It's not an asset class. And that's a misnomer. It's an asset class and it's an access class. It does a fantastic job of teeing up what I think the core challenge in venture is. So effectively, I think the best way to think about venture is this. So venture is a particular type of business model, and obviously you have bootstrap businesses. But I would say venture is the best business model if you're trying to truly create a world-leading, impactful company that would likely go public and you would try to have be durable. I also have a huge soft spot in my heart for family-run businesses that are still around 50 years or 100 years later. And I think that they're, just an incredible gift to the world. But the odds of creating one of those is very, very, very small. And so I had this realization a couple of years ago where really, I was thinking at the time about so I've always been very heavily invested. If you think about just asset allocation in terms of how you're investing, the vast majority of my assets are in private companies at various stages. And some of that's through, the majority of that's through direct investments. A portion of that is through, investments through venture funds and managers I've selected there. A portion of that's kind of private equity, which is different, in many ways than venture. But if you really zoom way, way out and you ask yourself the question, why invest in businesses? The answer that I came to is this, which is, I think that entrepreneurs are, I would say one of the primary drivers of progress in the world, meaning they are, if you think about what an entrepreneur is doing, they're putting their reputation, their livelihood on the line to try to take a company, and most of us think of the growth chart or the revenue charts of companies of basically starts at a baseline and you're actually moving up. No, if you're a founder, what you're actually doing most of the time is you're burning and your trip as a company is literally, you're going underneath the chart and you're trying to invest in something that's appealing to customers. And if you're able over time to create a fantastic value proposition that attracts customers, and then you find out a way over time to be able to generate enough margin and revenue on top of your cost to actually have enough profit to have a sustainable business, that's where you start to do this. That is incredible. And so, entrepreneurs, I would say, are at the tip of the spear in my mind in terms of just bringing new competition, new types of products to the world. And so if I believe in progress and I believe in entrepreneurs as a force for good, then why would I not invest in that asset class? And so that, is kind of what got me, I would say, profoundly comfortable investing in venture. And then to answer your question about why do the two? So the reason I shared that is where I netted out and where I still am today is overwhelmingly, I always want to be invested in companies. And that'll be some portion of that will be through public companies. The vast majority of that will always be in private companies. And so I'm all in there. So then to answer your question, which is much more about how do you do that? The approach that I took was if you're a venture investor, you absolutely need to think about how you are differentiated and how you're going to compete to be able to get the best deals. Because, I said at the beginning, I said before, it's an access class. So sure, part of it is having a network and being able to get access to founders and deals. But then there's a second piece, which is even harder, which is how do you close them and or get them, and this is obviously more important in fast-paced fundraising environments. But in fast-paced fundraising environments, one of the biggest challenges is to make sure you actually get an allocation. The fund may, the round may already be oversubscribed. And so, basically what I came to was, as I reflected back on my last 10 years of investing, all of my successes came from the fact that I brought differentiated value. And I was a designer by background that was investing, and I could help founders with design. We could talk much more about that and why that's so appealing for a lot of founders and why that's such a hard area. But effectively for me, if I'm saying my background's in design, I go and help founders with design, and then I invest in them to be able to do that. Well, a core part, if you think about that as a flywheel, a core part of that is I have relevant experience in design. And if you're being honest with yourself, you realize that at any point in time, there's a decay curve on your previous experience. And so I just had a realization where I was like, it's actually net better for me. And it's the right call to do both things at once because each feeds itself. If I continue to do fantastic work as an operator, as a designer, I know what the environment is like. I know what it's like to build a design team now.
The latest tools and stuff as well.
Yes. So then you invest and then I help. And so effectively for me, it was just this profound realization that I need to have skin in the game and I need to be an operator as well as an investor. And for me, I think it's important that I actually do both at once.
So some of the rapid fire questions come to mind is, one could also say, why do all of this instead? Just take all your money and why not just invest that in a top tier VC fund like, Sequoia, Benchmark, why not just do that?
You totally could. I think a lot of people would be comfortable with that. I invest both to make money, but also as a way to learn. And this is a topic I've talked about with a lot of investors. A lot of investors have a similar thought process, which is part of investing in companies is learning from them. And what most of them share at the end of the day is that actually just by being a passive investor, you typically learn zero. Sure, you're going to get some investor updates. I'm sorry, there's not going to be any gems that you've paid $0 for as a price of admission that are going to be a bullet point in an investor list and is going to meaningfully improve your knowledge. It's just not a thing. And so I think, again, the hard truth here is if you want to learn, you actually need to come into contact with that business and help that team and roll up their sleeves. And so, again, I think my perspective is I'm going to both learn at the fastest pace, meaning I'm going to learn as an investor by having skin in the game, by, actually having money at risk to lose on the upside and the downside by making it my decision and my, responsibility to make that investment. So I would say that's kind of the core reason in my mind is I actually think it's, from my perspective, you're a better investor. And it goes back, I think maybe the best person that's had a quote on this is Warren Buffett, which has talked about, he's in a similar but different position where he's an investor in public companies. He's also buys companies wholesale and then operates them. He's not the CEO. He's the chairman and he allocates capital. But he said before, being an entrepreneur makes me a better investor. Being an investor makes me a better entrepreneur. Completely agree. And I think it applies.
Are you going to the Workshire Summit this year?
I'm not. I've gone one time and it was fantastic, but I have no desire to go again and again and again. It was, phenomenal to go once for sure. But I would much rather just grab notes from the live stream. And to be super honest, I'm midway through this book at the moment. For anyone who's interested, I'm sure you've probably read the investor letters. This book does a great job of basically breaking them apart around themes. And so I would say, again, just in the spirit of you have a limited amount of time. If I have to choose between going to the conference, which is a pretty lossy experience, I'd rather spend a couple hours just reading a book like this and studying it.
So something else I'm just thinking about is, why raise your fund through Ligature versus just investing your own money as an angel investor? Why raise a fund? Why not just keep investing your own money and not have to deal with all this stuff?
So I've done that. And I would say, it might help to just lay out some of the journey to how we got there. So one of the things that, let me set it up this way. I've now been a venture investor. I've been an angel investor. I've been investing in, early stage companies for a decade. When I first got started, I had curiosity, but no real ambition. In my mind, I had no idea I would end up investing in 100 companies. I had no idea I'd end up, raising a fund. In the very earliest innings, it was, I've always had a profound interest in business. I've been a weird designer that's maybe as interested in the business side of how companies are run as in the creative side. And so I think I'm just frankly wired a little bit differently. But when I got started, it was really just I felt like I had relevant experience at the time. I had just some self-taught designer by background. I had worked, I've done freelance work to start. I ended up working at an agency in LA called DDB. I ended up coming to San Francisco and joined the design team at Apple. And then I made the move after 3 years at Apple and went and joined the team at Square early on. And about a year into my experience at Square, I had the kind of profound sense that I was now coming into contact with many startup founders, and I got to see what they were struggling with. And typically it was some variation of fantastic idea, because most founders are technical or they may be business oriented or operators in by nature. But they really struggle, I think, to think about how to actually bring this vision to life, because it's much more challenging to do than just to kind of come up with it in your mind. And so at the time, really, it was like, I felt like I had relevant experience as a designer. And my thought to begin with was, would startup founders even be interested in a designer investing or a designer advising? And so I started then, I actually wrote my first check into Drew Wilson, who's a designer, and he had a company at the time named Plazo. I remember, meeting him. I remember giving him this check. It was the largest investment I had ever made in my life at that point in time. So there was a lot of anxiety. It was $10,000, which, for anyone who's just starting to invest, it's a lot when you're making, in venture, you're making committed bets to individual companies. So that was my first check. Subsequently ended up investing all of my own capital for probably the first 6 years as an investor. That is not, just to pause there for a second, if you actually look at the profile of most venture investors, they never actually invested their own capital. If you actually look at most general partners, one, their GP commit as part of the fund is as close to zero as you can get. The amount of skin in the game they have is de minimis. They have a position to lose. Their reputations may be tied to the firm. They have no skin in the game. And so for me, it was really important that I learned by doing first and got to a place where I felt like I had made mistakes with my own money and got more competent to where I really got comfortable. And so that ultimately put me in a position where it felt like I was comfortable now going to others and saying, hey, here's a fantastic company. Here's why I'm really excited about it. Would you be interested in investing? And that then led to the fund. And so there's not, I think in my mind, it's like just going back to the theme. I profoundly kind of embrace I don't have all the answers. There's not like a super vivid vision that I'm pursuing. What I'm really trying to do at every point in time is just ask my question. If I'm enjoying this and I'm continuing to do really well at it, how could I dial it up even more and bring it to more of its full expression? And by raising a fund, it's additive. I now can write angel checks, but I could also write checks for the fund. We can work with phenomenal, our LPs are phenomenally talented. It's been amazing just to be able to spend time with them and get them involved. It's honestly just a way of playing the game at a higher level.
Higher level meaning having more capital to deploy rather than you doing as an angel?
Yes, having more capital to deploy and also being able to, I think there is an act of having a fund for sure that is just much more rigorous. We had to articulate to LPs and to ourselves, what are we investing in and why? And for us, we're generalist investors. We actually invest 10% outside of the US, 90% in the US. We are about 2/3 seed and pre-seed, and then about 1/3 growth. All of that, took a lot of work to be able to articulate. And I think it helps you refine your own thinking. And, it also, it's just different when you're doing something in service of others. Like as an angel investor, the only thing I have to do is scratch my own itches and make good decisions. And if I do those two things well, I'm going to be fine. As a GP, I take the commitment extremely seriously. This is people's capital. It's my job with my partner, Dan Becker, who's, phenomenally talented. And I'm so lucky to be able to work with at Ligature. And so part of it's honestly having a thought partner for the fund and being able to do this with Dan Becker is a huge plus. But the other plus is just it's made me a better investor because it's raised the stakes and forced me to just get much more disciplined, much more rigorous, and do a much better job of articulating what we're doing and why.
So follow-up questions to just what you explained. Very early on, I had a call with a partner at Excel who was explaining to me the fund mechanics and stuff. And I remember what they said, their goal was to take the capital they had and 3x it, ideally. That was their target. So for someone who's trying to think about let's say investing your LPs in Ligature, what is the goal there? What is your goal personally? Is it the same, for example, Excel to 3x their one, or maybe a little bit higher?
Yeah. So the 3x, probably part of the reason that partner quoted 3x is if you look historically at basically venture funds, the typical performance is somewhere around a 3x. It's 2.5 to 3x. And so that's
This was in 2018, by the way, for reference. Yeah. When we had the call. Yeah.
Yes. But looking historically, that's the actualized return that the industry at large, if you were to just average it, has been able to create. Obviously, I think if you're a good investor, you should be aiming higher. The way that we approach it at the fund is, our bar for every investment that we make is we have to believe that it has, sufficiently high odds of achieving a 10x return. I will say that, it's our job to underwrite that. part of, I think, having now invested in 100 plus companies, worked really closely with founders and teams, seen successes, seen failures of different magnitudes. I think it just gives, when you're able to like take in that much data and really feel what it's like, I think you get to be pretty profoundly, you profoundly recognize that there's just so many inputs that influence the ultimate return. As an example, I've had companies that are phenomenally successful on a like amazing path that have imploded because they've mismanaged a part of their business. There is nothing worse than seeing that as an investor. And the reason I bring that up is like they effectively, it'd be like a plane flying through the air that ends up going down because of an engine failure. If that engine failure hadn't happened, it probably would have been just fine, but that stuff happens. And so the reason I'm saying that is like, it's our job to underwrite it to that and to get to that level of conviction. What ultimately ends up happening is up to much greater, circumstances than we're able to control.
I guess here's my hypothesis, and maybe I should rephrase the question in a different way. My hypothesis or assumption is that people want to invest in smaller funds, like I'm talking about like Ligature or in a similar category, versus investing in, like a bigger fund, like let's say a benchmark fund. My assumption is that something like investing in a fund the size of Ligature and run well could potentially produce a higher return just because the fund under management is lower than a big behemoth fund like Benchmark. That's my assumption. So is that true? Is it completely incorrect?
No, I would say that's absolutely true. And I mean, part of that's, I'm sure, attributable to like the law of large numbers, which just says, if you compare a fund like just to make an absolutely absurd comparison, if you were to put Andreessen Horowitz and their 2 billion fund that they raised for something like crypto on this end of the spectrum, and then you put a micro VC that's raised $25 million for their fund on this end of the spectrum, I would hope that if they're both equally competent, this fund's absolutely going to outperform because the odds are higher for them. They're making fewer bets. They don't need, part of, I think, the challenge when you have a really large fund is you have to deploy massive amounts of capital. And I'm sorry, but like your opportunity set just gets much, 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 much smaller. I'll add one more note, which is one of the things that's always that's very interesting to me about venture is I know many people that are fantastic investors that just have had no success in venture. I know people that have deployed millions of dollars and basically not even gotten all of it back. And so part of also why I have the conviction in venture is I've already had a number of super successful, significant wins at like 50, 100x, level outcomes. And so I think one of my theories about the asset class is like, it's very easy to be skeptical. It's very easy to believe that the return profile is actually low. In my experience, I've had a very different experience than I think some other.
So right there, kind of like digging into, like experiencing those crazy returns as well. I know you were an early investor in Bison Trails and Notion. And I'm assuming this is when you were angel investing, or was this like investing through the fund?
A longer list than that. Superhumanpublic.com is one of those. Good eggs. There's I could kind of list it out, but that's not the point. So some of those were at the fund, some of those were angel.
I guess my question where I'm going is to get in on, the seed round or Notion, knowing where like Notion is now is insane. So what I'm trying to figure out is like, how did you get the access to that deal?
So you and I had chatted through this question and I've thought about it a lot. And, it feels like there's kind of two paths. One would be super granularly to just say like, here's how I got access to this deal. Here's how I got access to that deal. I think the more important, profound thing is thinking about like, what are the drivers of access over time? Because in my experience, it's like, if you're a venture investor, you're writing, say, 5 to 10 checks per year, and you commit to doing that for 5 years, you're going to, if you're competent at what you're doing and you have like a great network or a great reason why founders want you on your cap table, you will find exceptional companies to invest in. And so, anyone with a large enough kind of sample size will do really well. I think in my case, what's been, like the drivers of that over time have honestly boiled down to just a few things. I would say first and foremost, it's actually just be like honoring your commitments and doing a great job when you are introduced to companies. One of the most underrated things in venture is everybody talks about like, hey, what are you looking at? Can you share that with me? The much more important driver over time is actually, can you, and this goes to like, this makes me think of somebody like Berkshire Hathaway and Warren Buffett, who's been like a trusted, reliable, honors his commitment investor for now decades. And when you're able to do that, that advantage just compounds and compounds and compounds and compounds. And the reason that I share that is like, I guess what I've realized over time is just kind of just honestly two things. There's the size of your network and the composition of that. So obviously, every investor is going to benefit from having a larger network as long as that's like relevant connections. So it's people in technology that are doing interesting things that might be connected either on the capital side of kind of VC or on more likely the kind of operational side. So that's one piece. The second piece of that's then like people's propensity to actually recommend you. One of the biggest gifts anyone can ever give you, this happens all the time to us at Ligature, is, we have people that are literally will just send us a deck and be like, hey, I think you should be looking at this. I was just talking with this person. Or, another VC investor will say, hey, we're about to close a deal in this company. We have a little bit of an allocation. Would love for you to be able to invest. And so really it's like you want to have relevant connections that can connect you. You want to develop a reputation as somebody that actually follows through and does a fantastic job and honors your commitments. Because I'm sorry, if you don't do that at a certain point in time, people will stop sharing deals with you. And then the third piece is you want to make sure to just honestly do a fantastic job. I would say one of the hardest parts of venture is doing a great job at passing on companies. Every venture investor needs to pass on companies. How do you pass while having that be as great an experience as possible for the person on the other side of the table? And so I think thinking about those things over time, if you do that well, every single year your network gets stronger, your propensity to get great referrals goes up and goes up and goes up. And so it really boils down to just a couple of things.
I'm kind of wondering if, going granular in Notion makes sense. I'm just like going at it out of curiosity. Like, it's okay, if you can't share, that's totally fine as well.
It could totally make sense. I would say, so one thing I will say as well too is like one of the underrated pieces of this is, so it's very easy now to be like, oh my God, Notion is just everybody uses it at every company they use it. No, I'm sorry, for every company, and this is why I kind of shared this idea that like every investor investing consistently over time will have a couple of just outsized bets. It's a power law driven industry. If you write 50 checks, everybody will have some fantastic names. But I would say one of the most profound things to me over time has been experiencing viscerally the delta between what these companies are like when you typically invest really early. Like, it may give you maybe a better example because it was more divisive. Like with Notion, my thought at the time when I invest, literally, the kind of stream going through my mind when I invested, this was probably, I want to say 2016 timeframe, just like roughly. Notion was not known. It was not well used. No one had any idea it even would have a chance at all of creating $1 billion plus business. And so my thought at the time, and honestly, I think when you're looking at stuff really early, what I try to focus on is the team, because the team is, they're incredibly strong and you're making a good bet on the founder. I would say that's one of the best ways you could due diligence that investment. The other way in my mind is just like digging into vision and digging into how much they care and how important it is for them to be building this company. Because ultimately, if you get those things right, a company can start off in a terrible place and end up building something really, really, really incredible. And so I would just say, like with Notion, when I made that investment, nowhere in my mind was that this was going to be a like out of the ballpark winner. But that's part of being in venture, as I would say, experiencing that. Maybe a better example in my mind would be Public. So when Public was one of the first deals I ended up investing in and then bringing other investors into that deal with me. And I want to say this was like 2018, maybe mid or late 2018. And so Public at the time, nobody knew it. They were super under the radar. They hadn't even publicly launched their app. They're actually called Matador. So for anyone that knows Public today, the initial version of that app was called Matador. What I saw when I met that team, because the number, effectively, like the more I dug into it, and as I went about investing and then kind of pitching other people on this, the number one thing everybody brought up was, well, how are they going to compete with Robinhood? Because Robinhood was already successful at the time. They were already doing really well. And so honestly, I had a tremendous amount of conviction in Public. I had a very hard time convincing other people that it was a good bet. And I would say that's one of the most interesting experiences as a venture investor is having your own conviction and knowing where you get that, and then trying to go to other people who want to be venture investors and just being like, oh my God, you have just on totally different pages in terms of how to think about this and how to value this. The reason I ended up investing is honestly, I had a belief. I already knew that Robinhood is doing payment for order flow. This is a very old story. If you were following the industry, you knew this back like five years ago. So I already knew they were doing payment for order flow. I had used the product and thought it was well designed. But to me, it was just very clear that like there was not alignment of interest between the company and their customers outside of just trying to give people a free product, but kind of generating revenue in a bunch of predatory ways. And so when I met Public, it was a company that was mission driven. And its mission was to give everybody access to be able to invest. And they were, I really enjoyed some of the ways they were expressing that, because one of the things you always have to do as a venture investor is like find a way to verify what people tell you they think is important with demonstrated actions that actually prove that it is important. And so, one of the ways I validated that was like they were doing an incredible job at the time at investing in education. They had a really phenomenal early discovery experience in the product that would help people be able to find investments based off their interests. And so honestly, that investment, when I made it, was super high conviction on my end. I knew that there was probably the biggest risk was just competitive risk with Robinhood, but I invested with the belief that a more aligned business model could likely be a better outcome for the business. And that ended up playing out. But, it's like, I would say that story from where they started and where they are today. And the fact that in all likelihood, they will likely build a bigger business than Robinhood, to me, just continues to blow my mind. And I think I learn a lot from experiences like that.
You mentioned about growing the network over time by sticking to doing the right thing. I wonder, now that you have a fund, do the LPs also help you in closing deals? Like you might have an LP that might consult with one of the portfolio companies, or they might bring some deals to you. Is that possible, or that usually doesn't happen?
So I would say we're incredibly fortunate in that we really designed the fund from day one. And for anyone that's interested, you can go learn more about our fund at Ligature VC. You can see the pitch deck that we literally send to every single founder, which includes our kind of core value proposition. So for anyone interested, I highly encourage you to go check it out. We were very intentional from day one that we wanted an LP base that was mostly operators, and there was a bunch of decisions that had to happen to make that true. We embraced a rolling fund as opposed to a traditional fund, with the point of view that yes, some operators have had successful exits. The majority of operators have not had successful exits. And sure, they probably have some disposable income they can invest, but it's unlikely that you're going to succeed at basically the core VC value proposition of, hey, do you have, $250,000 to $500,000 that you'd like to invest and give us for 10 years? I think that's in general terms for operators, it's just a wild value, kind of proposition. And so we embraced the rolling fund model. We made it so that the core commitment we were going to ask LPs was at least 4 quarters. We made it so that the minimum investment was super, super low. We started out at $2,500. I think today it's somewhere between $5,000 or $10,000 per quarter. And all of that was really with the belief that we wanted to have an LP base. And when we talked with founders, our LPs were as much of the story as was our involvement in the fund. And so in the founder pitch deck, we feature LPs. We have phenomenal LPs. And so they do everything. Our LPs have sent us phenomenal deals, and we've invested in a subset of those. Our LPs have worked with our companies one-on-one. Our LPs have done really valuable things to help companies launch. I'll give you a great example. One of our LPs is Chris Messina. I've known Chris for more than a decade. In fact, when I was first doing early, web design, Chris and I crossed paths 12 years ago, 15 years ago at this point in time. It's insane how long ago that was. He's the number one hunter on Product Hunt. And so, oftentimes whenever we have companies that are getting ready to launch and Product Hunt's going to be one of their channels, we'll connect Chris Messina to those teams, and his ability to inflect and just change the trajectory of those launches on Product Hunt's incredible. And so that's one example. That's one LP, and we have hundreds of LPs. And so and I'll just give you one other crisp example. And to answer your question super pointedly, we've tried to lean into this more and more over time. The most recent incarnation of this was about 6 months ago. We went and surveyed all of our LPs and effectively asked them for the first time, what are the areas that you want to help in? What's your availability to help? How much time? What sort of, structure in terms of that? Would it be one-on-one calls, an advisory meeting, potentially joining the team as a full-time employee? We now share the results of that with every single company that we invest in right after we invest. And so really, I would say how we try to frame ourselves is, and where we have the most success is, I would say, we are absolutely, for the investors that we invest in, we are the most value additive investor on their cap table, specifically around design, but also around things related to that, like launching.
The last point, we are the most value added, fund, I guess, from the design perspective as well. But now I see that there's other people doing similar stuff, like designers who started their own fund. So how do you view that? Do you view designer VCs now, like Designer Fund, Soleo, or Character, that are playing in the same space as Ligature? Do you view that as competition? Do you view that as collaboration? What is your take on it? Or how do you make Ligature stand out?
I'll be super honest. So I've been an advisor at Designer Fund for 5+ years. I'm an investor in 2 other funds. I was an investor in Soleo's fund combine that he had with Adam. And so all of these in my mind are like, we're friendly with them. They're people that we know and respect and would love to try to do more investing with. So kind of bubbling up from that for a second, I would say, if you zoom way, way, way out and you look at design focused VC funds and the dollars that they have to allocate versus the venture ecosystem, it is like a pinhead, the size of it compared to all capital deployed. And so I would say I've never felt the competition. It's never felt like competition. There are times where we're investing in the same deal. More often than not, we're actually investing in different deals. And so I would say, if anything, we have a similar value proposition in that we care about design. We have unique ways to help you with design. And, we have a track record of being able to do that. And we can show you that. But I would say if you 5x'd the number of VC funds and the capital, focused around design, maybe then I'd begin to feel it. But I don't even know if it, it'd probably take 5 to 10x the amount to really change that. And so I would say the ways that we help are unique. And it's mostly around my experience being the head of design now at multiple companies and my sense of honestly where most companies struggle. And so, every fund has different ways of helping. The ways that I've, from my experience, we've been able to be most helpful really fall into basically 3 categories. And I would say these we do differently than the other funds in my experience. One is help around hiring. One of the biggest things that I find has blown my mind consistently is if you talk to most founders, they care about design, and yet design to them is basically like a black box. They have no idea how it works. They don't know who to hire. They don't know how to interview. They don't know how to set somebody up and what should their first 30 days look like. They don't know how to do creative reviews. And so I would say with hiring, the ways that we help are everything from, okay, you have no designers and you want to hire your first designer. Okay, well, let's help you write your job description. We'll think through literally the interview process because as an example, and for designers, it's going to blow your mind. But, it's not intuitively obvious you would do a portfolio review. It's not intuitively obvious you might have somebody actually work on an exercise. Maybe it's even an exercise in a room, like a brainstorm exercise. And so the way you interview designers is very intentional and very different than the way you interview, just generally speaking. And so I'd say interviewing and hiring is one, and kind of team structure and just honestly demystifying like how you hire and put together a really talented design team. Another one's just creative reviews. One of the things that we lean into a lot, and I would say it's probably the vast majority of our time with companies, is literally joining them for a call. It's typically the founders, a couple of designers on their team. For some of our companies, literally it'll be 10 people on their team that will join. It'll be heads of marketing, head of growth. But what we'll literally do is set up a recurring call, typically be something like an hour. And we will once or twice a month basically sit down with them and just go through everything that they've been working through from as it relates to product, as it relates to design, as it relates to branding. And honestly, just share our thoughts, like tell them, in half of it, I would say maybe a third of it is saying, this is fantastic, continue to push this and focus on this. A third of it is like, here's ideas and things I would explore and things that, I think you should think more about. And then a third of it is probably like, here's pitfalls and traps to avoid. Don't do, and these are all helpful at different moments in time. If you're an early stage company and you're thinking about branding, we have a lot of advice for you around pitfalls to fall because you're not going to build a business and achieve product market fit because of your logo. You should not be spending a bunch of time there. And so I would say those are, just to give you a sense of what some of that looks like tactically.
Whew, man, I I just bombarded with these so many questions, and I feel like I got like a mini crash course right now on basically what it's like to continue investing as a design operator. And it's blown my mind away. Like there's so many takeaways I got from this. I remember there are some folks I interviewed on the podcast as well, and also outside of the podcast, where I was like, "Oh my god, I would love to invest in your company." Some of them I can't name right now, and some of them were very honest. Like it was a no. Some of them are very candid. Like, listen, hey, one of the other investors is like this big shot person, and so like I don't know how to justify that. I'm letting you come on the cap table. So I totally resonated with the access part, like getting that access and why it's so difficult.
Well, it's super challenging. And I would say, just maybe to reflect on that on my own, like I struggled with that super seriously for probably the first 3 to 5 years. I would say the first 3 to 5 years was like much more not being taken seriously. And this is not to be, I don't think anyone should be surprised by this. Like effectively, if you're an investor, just like any other field, you're going to need to have credibility and you're going to need to have a track record and you're going to need to have some sort of a reputation around this to really be able to, I think, like be recognized and viewed as being serious. And I would say, especially like spending time with founders, if you put yourself in the founder's shoes, like raising capital for them is it's a job to be done. They don't want to be spending their time there. What I love is founders that are like, I can't wait to close this round. I'd love to have you write the final check. I want to get this done so I can get back to work, because that's exactly what they should be doing. And so I'd say it like definitely helps to kind of understand a little bit of the founder's perspective. And that's I think why there's a relatively high bar there. But I would say that's also why, again, like this idea of like dialing it up and trying to play the game at higher levels, in my mind, honestly, like the way I view design, the way I view investing are the exact same. They are lifelong passions. They're places where every single year hope to be better than I was before. And I also hope to feel like I have so much more room to grow. And so I'm constantly like trying to just chase the gap between where I'm at now and where I want to be. And they're things that I can always be improving at some aspect of the game. And they're also, at least in the way that I do it, the way I've been able to kind of put these two things together, they're reciprocal. Like, you know, I truly do think like, and I can give specific examples, but I truly do think being an investor in advising companies absolutely makes me a better head of design leader, you know, because my sample set's larger. I've worked with more companies. I've worked with more companies on products. I just have a much deeper and broader base of experience to pull from.
Absolutely. And I think right now, what I've been able to do is I know that as I have a full time job as a designer. And then some of these founders that I've interviewed that are also like, you know, founders of design tooling companies, for example. So what I've been able to do is kind of help them close a contract with the company that I'm working at, or you know, some other enterprise companies in my network. And what I'm able to do is give them behind the scenes data on like what's happening, like why is this deal not moving forward? And that is very valuable to the founder, for example. Maybe not valuable enough at the moment to kind of get in on the cap table, but that's kind of like value add. I'm like just good karma that I'm, I guess, sending out. Like who knows where it's going to happen with that.
You know, maybe to like make it a framework that everyone can understand. I think one of the best ways to talk about what we've been talking about is just like focusing on controllable inputs. You don't get to control whether an individual founder is going to say yes or no, but you get to control over time, you know, the like number of investments you've done, whether you have like positive testimonials and references, you know, from the founders that you've invested in. And for people listening that are maybe to give people like tactical advice, for people listening that feel like they're stuck in this, like, I want to invest, I don't have great access, what do I do? One of the best things is just like treat every opportunity you come across that you're excited about like it is the only opportunity in the world, and do everything that you can to help. Because literally, like what you're trying to do is string together a bunch of pearls, a bunch of like wins. And you know, some of my favorite investors have done exactly this. You know, one of my favorite tools that they use is literally something as simple as like a Notion page that has the companies they've invested in and a quote or testimonial from each of the founders about how they've helped. And if you do that and say, you know, for anyone struggling, like commit for a year to making one investment per month and spend an absurd amount of time. Maybe set the bar for yourself at like 5 hours, 8 hours, 10 hours that you're going to go and help each of these companies after you make the deal. I guarantee you a year later, you're going to be in a very different place where you now have these companies you can talk to, founders that you can send people to, fantastic testimonials. And I would say that's what really starts to like move the needle over time.
Absolutely. I want to say, Daniel, thank you so much for coming on the show and sharing your wisdom.
Thanks for having me. It's a fantastic podcast. You've had a lot of other really phenomenal guests. So I just hope to, you know, meet the bar.
Absolutely. Thank you so much.